Have you ever wondered why some people seem to effortlessly attract wealth, while others struggle just to keep up? Over the last few years, I've turned page after page in some of the most groundbreaking books on money and investing. From the life-changing strategies in Rich Dad Poor Dad to the mindset revolution of Think and Grow Rich, and the deep investment wisdom in One Up on Wall Street. What I discovered has not only shattered my own financial misconceptions, but has also equipped me with powerful tools to grow my wealth. Today, I'm thrilled to unveil these secrets to you, secrets that could redefine your approach to money and investing. Are you ready to see what lies beyond the conventional financial wisdom? Let's embark on this journey together and unlock the wealth-building strategies that have the power to change your life. Let's kick things off with a classic favorite, Rich Dad Poor Dad. This book is like the Bible of finance, and it's easy to see why. It lays down the basic building blocks for handling money, stuff they never teach you in school. The story revolves around the author's two dads. His real dad, who's all about the safe road of getting a job, following the traditional path, and retiring with a pension. Then there's his friend's dad, a dropout who went on to build a business empire, preaching the gospel of independent thinking and investing in assets that make money for you. This book was my first encounter with the idea of assets and liabilities. Assets, the moneymakers like stocks, real estate, side gigs, or businesses, put cash in your pocket. Liabilities, on the other hand, drain your wallet. They're the things that lose value over time. The book warns against seeing your home solely as an investment because it often leads to overspending on a bigger house than you need, tying up your money in mortgage payments. Rich Dad Poor Dad lays out these ideas in a simple, easy-to-digest manner, stressing the importance of assigning each dollar a job and treating it like a loyal employee working to make you more money. It shifts your mindset, making you weigh every expense against its future potential to generate income. After all, every dollar spent today is one less dollar working for you tomorrow. The sequel, The Cash Flow Quadrant by Robert Kiyosaki, broadens this perspective, presenting the various avenues to earn income beyond traditional employment. It categorizes earners into 4 quadrants: employee, self-employed, business owner, and investor, encouraging readers to venture into the latter 2 categories to achieve financial independence. This book is a beacon for those looking to escape the rat race and forge their own path to wealth. If you're looking for practical advice you can put into action, I'd highly recommend The 4-Hour Workweek. When I first stumbled upon The 4-Hour Workweek by Tim Ferriss, the concept of working just 4 hours a week seemed too good to be true. But as I dove into it, I realized it wasn't about working less, it was about working smarter. Ferriss lays out a blueprint for anyone to live a millionaire lifestyle by creating their own business, automating it, and then enjoying the fruits of their labor while living life to the fullest. It's all about seizing the day rather than waiting until retirement to start living. These 2 books complement each other perfectly. The Cash Flow Quadrant opens your eyes to the various ways of making money beyond the typical job, while The 4-Hour Workweek equips you with the strategies to make those possibilities a reality. They're like a dynamic duo for anyone looking to break free from the traditional work grind and design their own path to success. Now, let's talk about The Millionaire Fastlane. The author emphasizes that getting rich easily is a myth, but getting rich quickly is possible with the right approach. It's a different perspective that you don't hear every day. The book outlines paths in the financial journey. The slow lane offers a safer route, focusing on good grades, a stable job, and saving for retirement at 65. However, it comes with the trade-off of exchanging time for money. The fast lane is about leveraging your time to create passive income, investing your time in work that generates money long after your initial effort. What stands out about this book is its realism. While acknowledging the possibility of getting rich quickly, the author emphasizes that it's not a stroll in the park. Achieving such success requires heaps of hustle, hard work, and discipline. It's not an overnight magic trick. It's the result of years of experience and dedication. Next up is Think and Grow Rich. This book tends to stir up varied opinions. You either love it or hate it. Some find it all fluff, expecting a clear roadmap to wealth and feeling disappointed when it doesn't deliver such. On the flip side, many credit it with transforming their mindset and financial lives, considering it a light bulb moment that helped them overcome limiting beliefs. In my view, when it comes to success, mindset is key. If you approach life with a scarcity mindset, believing there's never enough, that's likely what you'll experience. On the contrary, an abundance mindset can align your actions with beliefs that lead to success. However, mindset alone isn't enough. You also need consistent, focused action. It's like having the best tools, but never using them to build anything. So, if you're open to exploring your beliefs and diving into your mindset to improve your financial game, this book might be for you. Next up, we've got another classic, The Psychology of Money by Morgan Housel. Money isn't just about numbers. It's deeply intertwined with psychology. It's about how our minds perceive and handle money, influenced by our emotions, past experiences, and beliefs. These psychological aspects often overshadow our raw financial knowledge. One fascinating aspect of this book is how it tackles our tendency to overestimate the role of luck in financial success. We often look at exceptional success stories like Bill Gates and think we can replicate them. However, the more exceptional the story, the more likely luck played a significant role. Instead, the author suggests focusing on patterns rather than individual success stories. If one person found success using one method while 10 others found it using a different approach, chances are the latter is more reliable, as it's less likely to be influenced by luck. When it comes to money, there are fundamental principles and patterns that apply to everyone, regardless of luck or chance. Understanding and applying these principles can lead to financial success without relying on luck. Now that we've covered the basics of managing money, let's dive into the getting rich part, where to channel our money to make it grow. Alex Hosey introduces the concept of ignorance debt, which refers to the gap between your current knowledge and the information needed to earn significantly more. Essentially, the difference between your current level and earning 100 million is just the information you haven't learned yet. This concept is relevant when it comes to investing. As beginners, we might overestimate our understanding of the topic, thinking we're ready to make big financial decisions. However, this premature confidence can mislead us if our foundation is not strong enough. One recommended book to tackle this ignorance debt and start your investing journey is The Intelligent Investor, which Warren Buffett, the Oracle of Omaha, read at 19 and has hailed as the best book on investing ever written. Its timeless principles emphasize that successful investing doesn't require specialized knowledge or deep insights. It simply requires a rational framework for decision-making and not letting emotions override that framework. The book covers market behavior, fundamental finance principles, and the importance of maintaining control over your psychology. These fundamentals are often overlooked, but play a crucial role in successful investing. Then there's The Little Book of Common Sense Investing by John Bogle, the legendary founder of Vanguard and the pioneer behind index funds. Bogle champions a straightforward strategy: invest in index funds consistently over time. His rationale is that index funds generally outperform other investment options due to their lower costs and market-matching returns. He also provides guidance on the ideal stock-to-bond asset allocation, suggesting adjustments based on one's age to balance risk and return. However, I find some of the principles in this book to be a bit outdated, particularly in today's rapidly evolving financial landscape. For example, Bogle's conservative approach to asset allocation, increasing bond investment as one ages, may not align with the current economic environment, where prolonged low interest rates have diminished the attractiveness of bonds for some investors. Additionally, the rise of new investment vehicles and strategies, such as ETFs and robo-advisors, offers more tailored options for diversification and risk management that were not as prevalent when Bogle wrote his book. Moreover, Bogle's emphasis on the long-term benefits of index fund investing, while sound, may not fully address the needs of investors looking to more actively manage their portfolios or those seeking higher risk-adjusted returns through alternative investments. This conservative stance might be too limiting for younger investors with a longer investment horizon and a higher risk tolerance, who might benefit from a more aggressive allocation to stocks or alternative assets. In providing this critique, it's important to recognize that Bogle's foundational principles of low-cost investing and the importance of staying the course over the long term remain invaluable. Yet, as financial markets and investment products continue to evolve, so too should our strategies for building and managing our portfolios. Balancing Bogle's timeless advice with contemporary investment knowledge and personal financial goals can help create a more dynamic approach to investing in today's world. While John Bogle's The Little Book of Common Sense Investing lays a solid foundation for understanding the value of index funds in building long-term wealth, it's also essential to explore how personal experiences and unique insights can further enhance our investment strategies. This is where the Dhandho Investor and One Up on Wall Street come into play. Both books delve into the importance of leveraging what you know and observe in your everyday life to make informed investment choices. They argue that your personal experiences can give you a distinct advantage in identifying valuable investment opportunities. Let's take a closer look at how these books build on Bogle's principles by highlighting the power of personal knowledge in the world of investing. Across all these books, one message resonates clearly. There are no shortcuts to wealth. Success in finance, as in life, requires discipline, perseverance, and emotional intelligence. Yet, an often overlooked piece of wisdom is the importance of investing in oneself. Enhancing your financial literacy, cultivating additional income streams, and pursuing personal growth can yield immediate and tangible benefits, setting the foundation for long-term wealth creation. In sharing these insights, my goal is to illuminate paths you might not have considered and encourage you to think differently about money, investing, and success. Whether you're just starting your financial journey or looking to accelerate your progress, these books offer valuable guidance and inspiration. Let's embrace these lessons and chart our own courses to wealth.